Welcome back, fellow speculators, to the Speculator's Edge, where super performance begins and opportunities await. I'm your host, Berg. Today I'm going to show you how you can achieve super performance and make some serious money with stocks APAM, CRWD, HBIO, SIG, and ZS. So we got 5 stocks that we're going to go over on a technical theme and also the fundamental theme of those stocks as well. But before we dive in, if you haven't subscribed yet, please do. You can click on the TSC logo on the bottom right hand corner of this video. Like the video and leave a comment, and thank you for your support. Before we dive in though, this video is for educational purposes only. Do your due diligence before venturing off into stocks because of the risk that you can take. It's your duty to take responsibility for your own actions. So time is money, so let's go ahead and get a move on here. So we're going to start off with APAM, which is going to be Artisan Partners Management. They are in the financial sector, and the industry is asset managers. Okay, it's right here. So what we're looking for, of course, in my other videos, this is how my charts are. This is how I annotate my charts. They're very organized. So what we're looking for is we're looking for a prior trend of greater than 25%, which is right here. And practically what that prior trend is going to be is from the low to the high of from one base to the next base. So you're looking for a move at least 25%. Okay. So the next thing that we're looking for is we're looking for the stage, so the cycle of the stock, and we are in a stage 2 uptrend right here, as you can tell by the shorter term moving averages being higher than the longer term moving averages. Okay, so the red line is the 200-day moving average, the light blue line is the 150-day moving average, darker blue is the 50-day, with the green being the 20-day and the gold line or the yellow line being the 10-day moving average. Okay, so that is how we know that we are in a stage 2 uptrend. Also, you can see massive amounts of buying as well. That's what we want to see on each run up from base to base. So that's what we want to see. Large demand, good demand. Also volume decreasing on the pullbacks like this right here. Okay, that's what we want to see. So the third thing that we're looking for is the base and the pattern. So we are in a third base or the tertiary base within this stock, within the stage 2 uptrend, which is good, increases the probability of latching on to that next major move upwards. Okay, so the pattern that we're looking at here, that we're observing, is the cup with handle pattern right here. So this is the cup, this is the handle, and then what we're looking for is we're going to look for next is price. What is price doing within that pattern? And as you can tell, we do have price contraction within the handle of the pattern. So there is low volatility. Price action tightens up right here, really tight for about 3 weeks, 4 weeks, and so next thing that we're looking for when this breaks out, when price breaks out, is it near the 52-week highs? And of course it is near the 52-week highs, which is at 56.65 right here. Next thing that we're going to look for is the fuel. Is there demand? Is there volume dry up? And is there a large demand coming out of the base? Okay, so what we see is, of course, we have volume decreasing within the handle right here. Like I said, this is the handle of the cup and handle pattern. So volume does decrease significantly, dries up, and really dries up right here within this part of the handle. Okay, and is now increasing, and increases quite a bit. Large demand today on the breakout coming out of this tight price action. Okay, that's a good sign. So hopefully we can move up to that 56.65. Hopefully we can break that point, which is a high probability of doing that. Okay, so when you're doing risk management, place your stops however you place your stops. You know, I use usually a 5% stop, but when you use my AWR method, you can place your stop, say, below this $48.40, which probably, you know, $48.37, because you don't necessarily want to get stopped out. You want to keep, you want to give the stock some time to work itself out, especially when there's large volume, because that's telling you that demand's in there, there's fuel in there, okay? So with my risk management and position sizing technique, you don't enter in with your full position at first. You only enter in with a percentage of your position, which is based on where you place your stop at, and that stop should be where the stock is actually going to break down, where that is where it's a possibility of the stock actually breaking down. Okay, when the stock does break down to a low within the pattern. Okay, so the next thing is the super pivot. We're looking for the super pivot, and the super pivot would be at $53.50, which is right in here. And of course we're breaking that, and we breached it, so hopefully we can get a good move on with this stock. Like I said, the stock is not a recommendation. Okay, do your due diligence before buying the stock. So next thing that we're looking for is CRWD, which is CrowdStrike Holdings, and it is in the technology sector, and it is the software industry. Okay, so like I said, we have a prior trend, uptrend of 25%, greater than 25%. We are in a stage 2 uptrend, moving averages being above one another. The base in the pattern is the third or the tertiary base, and within this base, we have the double bottom with handle. Okay, so the double bottom comes right here, 1, 2, so 2 troughs right here with the middle and the peak. Okay, and what we do have is we do have a handle, which is right here, creating a handle, which was created here during the last few weeks. So that would be a double bottom with handle. Next thing that we're looking for is the price. What is price action doing within this pattern here? And as you can see, price contracts. It contracts right here. This is kind of like Mark Minervini's VCP characteristic, and practically what that is just where price contracts to a certain degree. So I think like 227 to 227.20 to 179 or whatever that is, 178.41. That's about a 20% contraction in price, and then with the handle, within the handle is 226.95 to 204.53. That's about 10%. So that's actually a good 50% dry up within the price, or a contraction in price. And not only that, we're showing the breakout, and the price is near 52-week highs right now. Okay, so 52-week highs being at 251.28. The close was at 228.60 with the high being at 229.41. Okay, so that's good. So next thing, volume decreases within the base right here, or while it's forming the base, and is increasing now, coming out of this pattern. Okay, out of the double bottom pattern, or out of the base. Okay, so what we look for next is where is a super pivot. The super pivot would have been, of course, at around 226.95, the high of the handle, and we could possibly see this stock get back up to around 251.28. Hopefully it'll surpass that, and yeah, once it does, I mean, that'll be the next phase, the next trend, or the next uptrend, so you can catch that meat. Okay, so no telling where the price could go from there. You know, like $300 or so is a pretty good number. Okay, not a prediction, not forecasting. That's just how it goes. Okay, so this is not a recommendation either on this stock. Just do your due diligence before buying. And then the next thing that we're looking at is Harvard Biosciences, HBIO, ticker symbol HBIO. What we have here is we have again another prior uptrend, 25%, greater than 25%, stage 2 uptrend, decent buying all in here. pushing this stock up. So institutions are in this crowd here, okay? And then next thing we're looking for is the base and the pattern. So we are in a secondary base, okay, and we formed a cup with handle right here. So this is the cup, this is the handle, okay? The handle happens right here. And price, so what we're looking for now is the price. What is price doing within this handle here? Well, we do have low volatility from $7.80 to $6.79, okay? We are contracting within the price, okay? So we do have a nice tight price range right here. And we are making 52-week highs at $7.85. The prior 52-week high was at $7.80. So this is good. It's cracking that. Okay, and next thing that we look for, volume decreases within the handle is increasing, breaking out of the handle. So we do have a nice decrease within this handle, okay? That's what we want to see, volume decreasing within the handle and breaking out of the handle on increasing volume. And of course, volume is increasing out of this handle. So now we move on to the super pivot, and the super pivot was breached at $7.53, which is this little high right here within the handle. Although $7.80 is another super pivot, but this is a pretty important super pivot right here. As you can tell, it broke yesterday out of that $7.53, and of course it moved up today, which closed at 1.05% today, okay? So not only that, the relative strength or the performance of the stock compared to its components or the S&P 500 and NASDAQ it's a high alpha stock, okay? So this is making new highs. You want to see that relative strength, that RS line making new highs as well. Again, this is not a recommendation on this stock, and the second or the next to last stock that we're going to examine is Signet Jewelers, which they are in the consumer discretionary sector and apparel retailers industry, okay? So we do have a prior uptrend of greater than 25% from low to high, okay? We do have a stage 2 uptrend. We do have really good buying within this stage 2, so we do have institutions in here. The third thing that we're looking for is the base and the pattern. So the base and the pattern, the base will be the third or the tertiary base, and we do have a nice flat base right here. Okay, this is the flat pattern, which is really good. We want to see that because what happens in a flat pattern is from high to low, we get a really good contraction in price and a really nice tight price range, okay? So we're looking at price now, and we do have low volatility and tight price action. Not only that, the price gap's up today, breaking out of this flat base, okay, and is making 52-week highs today, okay. So this is really good. It's a high probability trade. Not guaranteed, of course, so we don't predict and we don't forecast. We just trade in the present, okay. And so anyway, so volume decreases within the base here, and which of course that shows the tightness in price, and it's increasing dramatically, breaking out of this flat base, okay. Huge demand here. This is some huge institutional buying right here, okay. This could be a breakaway gap, and hopefully it is, because if it is, then we'll get a run up tomorrow. Hopefully that'll be the case, or it'll close in the green tomorrow. But if it does break down and it closes the gap here and breaks past that $57.44, I would just go ahead and leave the trade and move on. But if you set a tight stop, honor the stop, okay? Honor thy stops, like Mark Minervini says. Other than that, the super pivot was breached at $65.92, which was the close right here on this day back here in April. And as you can tell, there is huge demand within this flat base too, okay? So that's a good sign. That's what you want to see. You want to see heavier volume within the base, like heavier buying within the base, and good price action to meet that volume, okay? So it's just telling you that there is buying, there is institutional buying, and not only that, you can see how it flattens out on this 50-day moving average and stays it kind of pushes below it a little bit, but it pretty much stays on track. Probably those are more like shakeout points where institutions are gathering, shaking out smaller investors and taking their shares. Okay, so that's a good sign. That's what we want to see. Not only that, the RS, the performance of this stock, 326%. This is a high alpha stock, very good. So, like I said, this is not a recommendation. The next stock, the last stock, is Zscaler, ticker symbol ZS. It is in the technology sector and is in the software industry. Okay, so we do have a prior trend of greater than 25% here. We are in a stage 2 uptrend. The moving averages, longer term or shorter term moving averages, being above the longer term moving averages. Not only that, we do have huge volume, huge demand coming in on this stock here to push this up into a stage 2. So we do have accumulation, institutions buying in this stock. Next thing that we look for is the base and the pattern. We're looking at a secondary base right here, and within this secondary base we formed a double, or ZS formed a double bottom with handle, the double bottom being right here with the handle coming in right here. Okay, so price, let's see what price is doing within this pattern here. Price has a gap up several days ago or a couple of weeks ago, and huge gap up, huge volume on that gap. So we do have institutions coming in and buying within this pattern here, or even insiders. So what price is also near the 52-week highs, which the 52-week highs would have been, or is at $230.88, and so that's a good sign. Also, we're breaking out of this double bottom right here at the peak at $199.50. So, and also the handle, which the high was at $199.77. So we closed above all that. That's great news. That's what we want to see. So the probabilities of it getting back up to $230.88 is pretty good. The odds are in our favor on that. Volume does decrease within the base and is increasing coming out, breaking out of the bottom, the double bottom and the handle. So that's good. That's what we want to see. Large demand. Okay, breaking out. The super pivot was breached at $199.77, which was within the handle here, the high of the handle. And so hopefully we get that major move, or that good price move, and hopefully this is the next phase run up for this stock. Okay, so on a relative strength basis, it's okay. It's doing pretty good compared to its component parts within the S&P 500 and the NASDAQ. So other than that, let's go and look at the fundamentals of these stocks here. So we have APAM here. APAM, it is composite rating is 97. It manages multiple long only equity investment strategies with different market capitalization segments. It is number 8 within its industry, or compared to its competitors. Number 1 being FOCS. So what we do have, let's go look here. What we do have is the industry group rank is at 52, which is excellent. The group relative strength rating is at A. So earnings per share due date is 7/28/2021. Be careful playing into earnings. That's usually just a gamble. If you do, make sure that if you're in profit territory, or even if you do go into that, just position size properly. Don't go all in on all that. I mean, that's just a gamble. Okay, so but anyway, earnings per share rating is at 85. Last quarter's earnings per share percent change was 71%, with the last 3 quarters average earnings per share growth being at 47%, which is great. That's excellent on that, on the earnings per share. Also, with the sales, it is A. The SMR rating is A. The sales percent change last quarter was at 43%. That's great. That means their product has been selling. and has increased in sales since the last quarter. The 3-year sales growth rate, not so great at 3%, but the annual pre-tax margin is 40%. Awesome, so they are making some profit here. Annual return on equity is 167.6%, which is excellent. That's awesome. That's what we want to see. Percent change in funds owning the stock has only been 2%, but the quarters of increasing fund ownership has been 8%. So we do know there is institutional buying within this stock, okay? So let's go and look at CRWD, at CrowdStrike. Let's see what we have here with CrowdStrike. CrowdStrike is ranked number 2 within its component parts, or within its competitors. Its composite rating is at 90. The industry group rank is 119, not so great, out of 197. The group relative strength rating is a C+. So it seems like it is increasing. The earnings per share percent change last quarter was 400%. Excellent news. Let's see here. Consecutive years of annual earnings per share growth has been 3 years. That's awesome. That's what we want to see. So they've been making profits on an annual basis and increasing. Okay, so the sales and margin, the return on equity, the SMR rating is a B. Excellent. Sales percent change last quarter was 70%, with the 3-year sales growth rate being 92%. That's awesome news. That's what we want to see. Great on the fundamentals here. So percent change in the funds owning the stock has been 13%, and the quarters of increasing fund ownership has been 6. So we do know there are institutions buying this stock, so there is accumulation within this stock. As you can tell, it is a B with the accumulation distribution rating. So the next stock is HBIO, so Harvard Biosciences here. It is, the composite rating is 91. It's good. It's not ranked within its field here or within the competitors, but it does develop scientific instruments that enhance drug discovery research at pharmaceutical. The industry group rank is 107 out of 197, which is okay, not too bad. Group relative strength rating is a C+. And then the earnings per share percent change last quarter was 600%. Awesome. Last 3 quarters average earnings per share growth rate has been 200%. That's what we want to see. And number of quarters of earnings per share acceleration has been 1. Okay, so let's see here. The sales, not so great. It is a C on the SMR, the sales margin and return on equity. But other than that, I mean, yeah, that's not so great on the sales, but percent change in funds owning the stock has been 2%, and the quarters of increasing fund ownership has been 1. But this stock is in, I think, if I remember correctly, the secondary base. So it is working itself out, and it seems like, you know, there are institutions within the stock because we do have heavy volume. So yes, it is a secondary base. So other than that, the accumulation distribution rating is an A, which is good. So we do have accumulation, okay. Next is Signet Jewelers. So with Signet Jewelers, we are ranked number 2, and within its competitors, composite rating is 94. Retailer of jewelry and watches operating 2,653 U.S. and 555 UK stores under K, Jared, and other names. Okay, so the industry group rank, excellent, is 5, so it is one of the top industries here. The group relative strength rating is an A+, so the stocks are moving within this industry here. The only thing is, this earnings per share due date is on 6/30/2021, so coming up here within a few weeks. Be careful playing in earnings, like I said, but the earnings per share percent change last quarter was 240%. Excellent news there. A number of quarters of earnings per share acceleration has been 1. Also, what we're looking for, sales percent change was 98%. The SMR rating is a B, which is good. Annual return on equity, not too bad at 12.8%, but we'd rather see it like at 16% or higher. So, but we do have 12% change in funds owning the stock, which is excellent news there, and we do have 2 quarters of increasing fund ownership. So we do have accumulation as well. which is at A minus, the accumulation distribution rating. So we do have funds coming in on this stock, buying, or institutions buying this stock here. That's great news to see. So we are trading with the institutions on this stock. The last but not least is Zscaler, ZS. And so let's go check out the fundamentals real quick. Composite rating is 85, with which operates a massive global cloud security architecture, delivering the entire gateway security stack. Okay, so these guys here, the industry group rank is at 96, with the group relative strength being a C+. So this isn't too bad, not in a bad industry at all. The earnings per share percent change last quarter was 114%, with the last 3 quarters average earnings per share growth rate being 121%. That's excellent news. We do want to see that, with the 3-year earnings per share growth rate being 90% and 3 consecutive years of annual earnings per share growth. That's awesome. Okay, so there's a lot of headwind with this stock, with this company. And it is a high growth name. It is a newer name, Zscaler is, and it's been around for a while, but still, you know, IPO'd, I don't know, a couple of years ago or whatever. So the SMR rating is at an A, with the sales percent change last quarter is 60%, with the 3-year sales growth rate of 51%. So we do know that they are making sales, their product is selling, so that's a good sign. That's what we want to see. Also, 12% change in funds owning the stock, and 5 quarters of increasing fund ownership. So we do know that there is accumulation within the institutions. The institutions are coming in, they're buying, and they're still buying on this stock here. So pay attention to that. Like I said, these stocks are for educational purposes only. Do your due diligence before you buy, okay? But other than that, before I end the video, I want to thank you for watching and supporting the Speculator's Edge. I hope you found the material informative and enjoyed it. Please subscribe if you haven't already by clicking on the TSC logo in the bottom right hand corner of this video. Drop a comment. Also, if you have any questions, I'll be more than happy to help you. I'll also post a link below to my Patreon site where you can subscribe to one of my tiers and get an exclusive stock list with that comes from my proprietary scan list, which has a mix of the fundamental and the technical aspects of the stock as to what we're looking for. Okay, really great list. It'll really increase your performance within the market, and it'll increase your profits dramatically. Okay, so other than that, I want to thank you again for watching. Here at TSC, we trade in the present, we study the past for knowledge, and we follow the process of trading to build our future. So thank you again, and opportunities await, my friends.